Aritzia has positioned themselves as an everyday luxury brand in the fashion industry. Founded and headquartered in Vancouver, Canada, Aritzia has expanded to over 100 stores in North America and has had explosive sales growth in the last couple of years.
What makes Aritzia unique is their positioning to decrease risk factors that impact similar businesses. Canaccord research highlights 4 different risk pillars: mall traffic, competitive environments, fashion risk, and management departures.
While many malls in the US are seeing foot traffic decline, Aritzia has sustained minimal impact because store chains are situated in higher-end malls and high streets. Additionally, while other companies struggle with the competitive and saturated fashion market, Aritzia has had 20-plus consecutive quarters of positive comp sales. Our CG analysts believe that this is attributed all the way down to the quality of their fabrics, styles, and ability to adapt.
This leads into their ability to navigate fashion risk. From a sales perspective, historically successful items have brought in a sizable amount to their revenue. Lastly, from a management perspective, we have a founder-led company and strong financial leadership team. Recently, Aritzia released robust quarterly financial results. Here to discuss those results and the company is Canaccord analyst Dley, CFA, Managing Director and Head of Research.
Derek, can you run us through a brief overview of the quarterly results recently released and how you view Aritzia's growth trajectory?
Sure, yeah. Aritzia really reported what we thought was just another stellar quarter with a revenue of $526 million. That was well ahead of our estimate of $455 million, which was at the high end of the company's previous guidance range. And where we were very impressed was the revenue growth in the US. It was up 80% year over year. That's the second consecutive quarter where it's been up 80%. In Canada, same-store sales were very strong, up double digits. Again, also the second quarter where we've seen a double-digit same-store sales increase in Canada. And e-commerce was up 33% on the back of what was just a really, really strong last 2 years, obviously, with COVID. What we think is really important for Aritzia as they continue to increase their exposure in the US, which now makes up over half of their revenue, is the US sales are actually higher margin for Aritzia. So for every dollar that they sell into the US, they actually make a higher gross margin than they do if they sell in Canada or online. So that's going to allow the company to increase their gross margin over time and also allow them to maintain their price points. Aritzia could pass through a price increase if they need it, and I'm sure it would be well received by customers.
Aritzia acquired Reigning Champ in the last couple of years. Can you speak to us a little bit about this acquisition?
Yeah, we like the acquisition of a 75% interest in Reigning Champ that Aritzia made a couple of years ago. Aritzia does not have a very developed men's platform at this point. Currently, they only sell one product under the Aritzia label, which is the Super Pup jacket for men, and it's been a huge home run. It's sold out the last 2 years. But we think the Reigning Champ acquisition is going to allow the company to really accelerate its men's offering going forward, as well as accelerate its e-commerce offering. And we think this is going to be a big growth opportunity for the company over the next 5 to 10 years.
Derek, what is your take on why Aritzia stands out from its peers, such as Canada Goose, Lululemon, or Roots?
Yeah, so when we compare Aritzia to the peers, we really have to use the best-in-class retailers in North America or even globally, as we think Aritzia is right there with them. The obvious comparable to us is Lululemon. We're not saying Aritzia is Lululemon yet. They didn't create a category like athleisure like Lululemon did. But they're really the next best thing. So when we look at comparable valuations, which is how we value Aritzia, it is still trading at a discount to the best-in-class retailers, about a 2-point discount on our 2024 EBITDA numbers, which leads us to believe that there's still a lot of value within the company, and we think, at the current share price, it's an attractive entry point.
Thank you very much for joining us today, Derek. Like and subscribe to keep up with the Cash Management team and our latest Canaccord research. Our investment advisors at the Cash Management Group are always a phone call away at 604-643-0101.
I'm always available on my direct line at 604-643-0108, or additionally, you can always visit my website at jarviswealthmanagement.com.